In the last couple of months, big companies like Amazon, Google, Tesla, and GameStop has announced their stock split intentions. And when it comes to stock splits, things can get pretty tricky because investors will either start selling their stocks to push down prices to get cheaper stocks after the split, or some will continue adding more to get more shares after the split. So let's talk about stock splits and how this will affect you. Hi, my name is Jordan and welcome to the channel. So big companies are announcing stock splits that are due this year. So let's talk about what stock splits are, why companies do stock splits, and how you can take advantage of stock splits. So when a company's stock splits or when a stock split actually happens, what essentially happens here is a company increases the number of shares it has to boost the stock's liquidity. So liquidity here refers to the availability of liquid assets to a market or a company. So in a stock split, though the number of outstanding shares increases by a specific multiple that is announced, it does not change the company's value. And while most commonly stock splits are in a ratio of 2-for-1 or 3-for-1, which means that for every one share that the stockholder is holding, they'll receive either 2 or 3 shares. Back in February 2022, Google announced a stock split of 20-for-1. Which means that if you're holding Google stock before the stock split date, which is the end of the day of July 1st, 2022, you receive 19 additional shares on the 15th of July 2022. Amazon also announced a stock split in March and is also doing a stock split of 20-for-1, which means that if you have one Amazon share, you will be receiving 20 Amazon shares after the 3rd of June. And this will be the 4th time that Amazon is doing such a stock split. Money. And just this month, 2 other companies, Tesla and GameStop, also announced potential stock splits. So Tesla is rumored to be splitting 5-for-1, which means that you'll receive an additional of 4 shares for every 1 Tesla share that you own right now. But the date of the stock split is still not announced yet, so that is something that we'll have to look out for. And for GameStop, it's not really clear when or how will the split be as of yet.
Refresh, no news. Refresh, no news.
But now, let's talk about why companies do stock splits. Because it might be baffling of whether these will make investors lose confidence, or will this be a better move to allow new investors to enter the market. And when a company does a stock split, it could be a sign that the company is growing and thriving so much that the prices of their stock has increased significantly, which means that the stock is less affordable to retail investors like us.
I can't afford that.
Like in Tesla's case, the last split was in August 2020, which was a 5-for-1 split. And at that point of time, Tesla's stock was priced at roughly $1,000 pre-split, which means that after the 5-for-1 split, each stock of Tesla is priced at roughly $200. What this essentially does is to allow retail investors like us to own some shares of Tesla, because buying a $200 stock is much more palatable than dishing out $1,000 to buy a single stock. The second reason for a stock split is to create more liquidity. So when a stock split happens, this increases the number of outstanding shares, which will affect the liquidity of the stock. So the split will provide greater liquidity, which facilitates trading and might reduce the bid and ask spread prices. With higher liquidity, it also allows traders to buy and sell shares in a company without affecting the prices of the shares too much. And with lesser price movement, this allows companies to repurchase their shares back during a stock buyback at a much lower cost, since their huge orders won't create such a huge spike or dump in the market. And what it means for companies, it means that this allows them to make the best of their money.
More bang for the buck.
And now let's talk about how you can take advantage of this situation. So there are 2 main train of thoughts here. The first one is to buy the stock now and hold it until the stock split happens. And the second one is to buy the stock after the split is done. And if you're looking to purchase a stock now to prepare for the split, and this is where we have to check out today's sponsor, HabitTrade. HabitTrade is the first crypto-friendly global stock investment platform that allows you to trade stocks available on the Nasdaq and the Hong Kong Exchange. So one of the key benefits here with HabitTrade is the ability to transfer stable coins like USDT directly into the HabitTrade platform, and from there you're able to purchase your favorite stocks that's available on the Nasdaq and the Hong Kong Stock Exchange. The HabitTrade app has a great interface that makes it really easy for people who are looking to diversify their crypto portfolio into stocks that hold less risk as compared to crypto. The HabitTrade app has a news tab that allows you to see updated news about the market and also the latest price movements. They also have a trending page that shows you the latest trending stocks in the markets that you can look into. And by signing up with the link in the description down below, you'll get a free stock worth $5 when you make your first purchase of $300 in stocks. And if you purchase more than $1,000 of stocks, you'll receive a free stock worth up to $20. And on top of that, you do get customized market intelligence to help you make informed trading decisions. But most importantly, always do your own research before investing money into any investment instruments. So thank you HappyTrade for sponsoring today's video. So by purchasing the stock right now, you are essentially able to lock in your buy price, and this can be easily calculated.
Okay, lock in. Lock in.
So for example, if Tesla is currently trading at $1,000 and you do purchase Tesla, with a 5-for-1 split, this means that after the split, your cost of Tesla shares is $1,000 divided by 5, which makes it $200 per Tesla share. And essentially, you still own $1,000 worth of Tesla, but now you have 5 Tesla shares valued at $200 each. And with that, the market sees Tesla at $200, the chances of people jumping in to start owning some Tesla shares will increase, which can drive the prices up again. And if Tesla price rise up to $500, this means that your $1,000 capital in Tesla has grown to $2,500, giving you a good profit. And the other train of thought here is to wait for the stock split to be done and then buy Tesla at whatever price it's valued at during that time. But with this, it might be a gamble because the stock split might only happen towards the later part of 2022, which by then we might see the price of Tesla stock rising even higher than before the stock split. So let's say Tesla rises to a price of $1,005 and then the split happens. And this means that if you were to buy Tesla right after the split, it'll be roughly $300 per share. But the converse might happen and Tesla might very well fall below $500 before the split, which will make the price of Tesla after the split roughly $100. But at the end of the day, there is no right or wrong answer, but more of how much risk you can take to get some gains in the market.
Could be risky, very risky.
So if you wish to lock in your buy price for Tesla at today's rate, it might be a good move so that you'll be able to have a peace of mind knowing that you have a fixed price on your Tesla stock. But if you do wish to wait for post-split, you will have a chance to get Tesla at a lower price than what it is valued at right now. But whatever way you select, do some risk management with your current financials and determine if taking this risk is something that you can afford, and most importantly, you must be able to have a good night's sleep as well. So thank you guys so much for watching. Don't forget to get your free stock when you start trading on HappyTrade. And once again, thank you HappyTrade for sponsoring this video. Don't forget to drop a like for the YouTube algorithm, subscribe if you haven't, and I'll see you in the next video.